How does the government prove when you're cheating, and how do they prove you're cheating willfully? The government establishes willfulness through the following objective observations as to the manner in which you conducted yourself. The government has seen every type of fraud imaginable, and if you act in a fraudulent manner, the manner in which you conducted yourself will be called a badge of fraud. These badges of fraud will be tallied, and a scale will go between negligence and willful intent as to cheating on your taxes. And they're going to add up these badges of fraud, and it's going to lean more and more towards fraud if they find them. So the government has relied on the following objective circumstances in determining that somebody willfully cheated on their taxes. These are badges of fraud. The withholding of information from accountants. If you have a foreign account and you omitted the income off that foreign account because you never told the government about that foreign account, that's a badge of fraud. If you've got 5 accounts involved in your business and that's included in your accounting, and you give that to your accountant to prepare a tax return, but there's a slush account, a 6th account that includes a whole bunch of income that didn't get reported for tax purposes, and you never told your accountant about that account, that's a badge of fraud. If you keep a safe deposit box under an assumed name, that's a badge of fraud. Why would you keep your identity off of that safe deposit box if you didn't want to hide its contents from the world? If you consistently overstate your deductions, the government audits you for a 3-year period and your deductions are grossly overstated for all 3 years, that's an extreme badge of fraud. If you claim so many withholding exemptions at the beginning of the year when you fill out your W-4 that there's no withholding taken out against your W-2, and then you follow that up by not filing tax returns, that's a slam dunk set of badges of fraud. If you claim false or grossly overstated deductions for charitable contributions, that's a badge of fraud. If you claim with your employer to be exempt from income taxes and thus no withholding is taken out against your W-2, that's a badge of fraud. If you find out you're being audited or criminally investigated and you cash in all your assets, you pack up your bags, you take your money with you and you leave the country, that's a badge of fraud. If you engage in a pattern of tax evasion, especially for a 3-year period or a 5-year period, that's a badge of fraud. If you give your preparer a cooked set of books which omits income or overstates deductions so that you can pay less taxes, that's a badge of fraud. If you prematurely destroy records surrounding your business, that's a badge of fraud. You got rid of all last year's documents, all of them, that's a badge of fraud. If you consistently fail to keep an accurate or a complete set of books, that can be considered a badge of fraud. If you're facing a collection action and you conceal sources of income, you don't tell the government about it, and you attempt to hide those sources of income, like receiving them in somebody else's name or somebody else's bank account, or you conceal assets from a collection action by selling it to your neighbor for $1, by transferring assets to the names of your kids, those are all badges of fraud. Matter of fact, those are felonies, evading a collection action, called tax evasion. If you arrange your affairs to keep from making the usual records for that type of business, that can be considered a badge of fraud. Excessive cash dealings, good example. If you refuse to cooperate or lie to investigators or auditors, that's a badge of fraud. If you've been participating in illegal activities to generate income, that's a badge of fraud. People that commit embezzlement don't usually report their embezzlement income. People that sell drugs don't usually report their drug dealer income. If you run all of your personal living expenses through your business and deduct them as business expenses, that's a badge of fraud. If you know you've had taxable income and you know you have a filing requirement, you purposely choose not to file tax returns, that's a badge of fraud. If you're filing objectively false returns, on their face they're false, that's a badge of fraud. If you're altering your books or making journal entries, false journal entries to understate your income on purpose, that's a badge of fraud. If you're under audit and you go about creating false source documents to support false deductions, that's a badge of fraud. It's also forgery. If you provide implausible or inconsistent explanations in a civil audit to an auditor or to an IRS criminal investigator, that's a badge of fraud. If you display rude, belligerent, or disrespectful conduct towards an IRS agent or criminal investigator, that's a badge of fraud. if you excessively deal in cash, if you file false tax returns, if you're intentionally omitting or underreporting income, if you're overstating deductions claiming false deductions, if you're hiding income by transferring it to related parties or related entities, relatives, that's a badge of fraud. If you keep two sets of books, one you prepare the tax return with, one you actually show what profit you made in case you ever sell the business, that's a badge of fraud. If you falsify records, forgery, that's a badge of fraud. If you falsely claim credits you're not entitled to, that's a badge of fraud. If you arrange your affairs in a manner that lacks economic substance solely to understate tax liability, that's a badge of fraud. If you take a position on a return based solely on the audit lottery, that you're going to get away with it if you don't get audited, and there is less than a 50% chance that position will be sustained on its merits, that's a badge of fraud. If you've understated income in 1 year, and that's the only year there's problems in, it's hard for the government to look at that and call that tax fraud. But if there's a 3-year period of like behavior, or worse yet, a 5-year period, which is the criminal statute of limitations for most tax crimes, sometimes 6, let's call it 5. If they can show that same pattern of behavior for 5 years in a row, that looks like willful conduct, not negligence, not anything else. When a taxpayer's state of mind becomes relevant to a tax prosecution, what they were thinking when they took an action, here's what the government can do. The government can present evidence of a taxpayer's later actions to refer back to what their state of mind was at an earlier time. For example, even though there's a 5-year statute of limitations on tax crimes, the government could look back to year 6, 7, 8 to show a pattern of noncompliance in those years to give credence to the state of mind of noncompliance in the years open to the investigation. They're going to show this pattern to get away from any inference that you may have been making mistakes. They're going to show this pattern to give the inference that you're willfully behaving in a manner. Evidence concerning your degree of sophistication as a taxpayer, your level of education, is relevant to determine your willfulness. The idea is, if you're a sophisticated person and you're highly educated, you should have known better than to do what you did. Thus, the government's going to provide evidence at trial that you're a professional, that you're highly educated, for the inference that you knew what you were doing and the inference that what your actions were willful. On the other hand, evidence that a taxpayer is unsophisticated, uneducated, maybe a housewife, that sort of thing, could negate the willfulness element. Tax evasion involves tax avoidance, which is accomplished through illegal means. Illegal because there's an element of deceit or concealment afoot. That's what the badges of fraud are about. Where's the concealment? Where's the deceit? The analysis of a complicated set of transactions, whether that's in compliance with the tax law or not, whether it's just negligence that you got it wrong, or whether you committed a tax crime, is difficult to determine. Here's what's involved. First of all, the illegality will be determined based on the totality of the tax law. Tax is huge. You ever go into a tax law library, it can wrap around this building twice. There's a lot there. We're talking the Internal Revenue Code, Rev Procs, private letter rulings, case law, IRS pronouncements. It goes on and on. Indeed, the body of tax law is one of the largest areas of law there is. It takes up a lot of room in legal libraries, especially at the county law library.